Welcome back, everyone. Today we want to take a look at Nvidia. Nvidia continues to do extremely well, as Mark Zuckerberg's Meta company is spending billions to acquire 350,000 H100 Nvidia GPUs. It's absolutely incredible. Now, in total, Meta will have to compute power equivalent to 600,000 Nvidia H100 GPUs to help it develop the next generation AI. That's thought-provoking. Seriously, that's extremely thought-provoking. Zuckerberg mentioned the figure today as he announced his company's long-term efforts to develop an artificial intelligent AGI, or an AI that can learn and be used to perform a variety of tasks. That's a big thing these days. Companies seem to have a huge focus on developing their own AGIs, and it seems like the hardware that they require, Nvidia is the best provider, and Nvidia has been doing extremely well due to the AI boom. Mark Zuckerberg envisions the AGI powering a wave of cutting-edge services and devices, such as more powerful digital assistants and augmented reality glasses, building the best AI assistants, AIs for creators, AIs for businesses, and more that need advances in every area of AI. Let's see what Zuckerberg had to say in his video.
Hey everyone. Today I'm bringing Meta's two AI research efforts closer together to support our long-term goals of building general intelligence, open sourcing it responsibly, and making it available and useful to everyone in all of our daily lives. It's become clearer that the next generation of services requires building full general intelligence. Building the best AI assistants, AIs for creators, AIs for businesses, and more, that needs advances in every area of AI, from reasoning to planning to coding to memory and other cognitive abilities. This technology is so important, and the opportunities are so great that we should open source and make it as widely available as we responsibly can, so that way everyone can benefit. We're building an absolutely massive amount of infrastructure to support this. By the end of this year, we're going to have around 350,000 NVIDIA H100s, or around 600,000 H100 equivalents of compute if you include other GPUs. We're currently training Llama 3, and we've got an exciting roadmap of future models that we're going to keep training responsibly and safely too. People are also going to need new devices for AI, and this brings together AI and the metaverse. Because over time, I think a lot of us are going to talk to AIs frequently throughout the day. And I think a lot of us are going to do that using glasses, because glasses are the ideal form factor for letting an AI see what you see and hear what you hear, so it's always available to help out. Ray-Ban Meta glasses with Meta AI are already off to a very strong start, and overall across all this stuff, we are just getting started.
Now, despite everything that he said, I want to touch on something very important. With Nvidia doing this well, you've got to ask the question, is this company overvalued? Currently at $594 for the share price, 1.4 trillion in market cap. Now here's some information on Qualcomm. Nvidia shares are trading higher amidst continued strength in semi following TSM's recent earnings. Raymond James also raised its price target on the stock from $600 to $700. That's mad. But you know what this reminds me of? It reminds me of the pandemic when Zoom became a huge company. Zoom technology was being used a lot more because people were working from home, so they needed a reliable video chat service. And for some reason, people just are not using Skype anymore. So they're using Zoom. This made the share price go through the roof. And since then, the share price have went back down significantly. It's fallen significantly because the need is just not there anymore. The demand is just not there anymore. So the company had a short period of time when the valuation was insane, but now it's back down to earth. Could Nvidia experience something similar? Are phenomenal. The revenue is phenomenal. The EBITDA, the free cash flow, it's phenomenal. Net income, EPS, phenomenal. They even give away dividends, but the dividends is a small amount. But you know what's incredible about this company? It's almost $600, and they've got 2.4, almost 2.5 billion shares outstanding. For a company with that much shares, for the share price to be this high, it's extraordinary. So the EBITDA, this is what the EBITDA means. The earnings before net income, interest, taxes, depreciation, and amortization. But we're not here today to understand that. I just want to explain it quickly. Basically, this is keep in mind, Nvidia has been doing extremely well in this area for a very long time. It's not something that happened overnight. And they've consistently been doing well in free cash flow as well. But recently, especially towards the end of 2023, they have been doing extraordinary. Absolutely extraordinary especially in terms of revenue. The sky's the limit for this company, but can they sustain it? There's not a lot of companies that are big as Meta that want to develop AI. Sure, companies like Microsoft, Apple, they're interested in it for sure, and other companies as well. Maybe even Amazon, Tesla is interested in it. So it makes sense for these companies. Basically, the Magnificent Seven. But what happens when but what happens when the demand falls? Before all of this crazy, this stock was riding on the crypto wave, the crypto mining wave. To a huge proportion, it still is. Do you remember those days of you couldn't buy a graphics card because the crypto miners were buying up so much? And don't get me wrong, crypto mining is not going away. It is not going away. The share was doing incredibly well. All throughout 2021, it just kept on rising. And a huge part of this was because you couldn't get a graphics card. One of these reasons was because of the crypto mining. In the background, there were also other issues, such as the demand on AI. It wasn't being publicly published at that time. Most people were just talking about the crypto craze. But there's other stuff, shortages on semiconductors. There's other stuff that were playing a part. But after that, as you can see, the stock price fell by a lot. And this was in 2022. And one of the reasons is because crypto went down. Let's be honest, crypto has not been the same for the past year or a couple of years now, especially after the NFT craze. But because of this new AI wave and the demand that Nvidia has been receiving, the price has been skyrocketed up. And it's currently at a pace where it looks like it's not going to return. But could it return back to all-time lows, or could it return to $300, $400, $200? $200 maybe not, but $300, $400, is it possible? What if the AI craze absolutely, just chills out? What if the demand simply gets reduced? Well, that's a good question because it's sort of similar to what happened with Zoom. And in recent news, Cathie Wood bet $712 million on Zoom stock. Where will it be in 2 years? With a share price of $70, Zoom Video Communications is down quite substantially from its peak of $568 in late 2022. Beg your pardon? In late 2020. The pandemic era suffers from stagnating growth and lack of platform differentiation from rivals such as Microsoft Teams and Alphabet Google Meet, which provide similar video conferencing services. What does Cathie Wood think? Cathie Wood believes that Zoom could fit ARK's aggressive growth-focused investment strategy, and in November the firm purchased an additional $12.6 million worth of Zoom shares. This is to bring the value of its total position to a whopping $712 million. So they've been purchasing Zoom shares for quite some time. It's nothing new for Cathie Woods. ARK is hugely optimistic about Zoom's near-term potential, given the stock price target of $1,500 by 2026. Which implies a gain exceeding 2,000 in just 2 years. Cathie Wood and her team believe that Zoom can pull this off by dramatically increasing its average revenue per user by introducing new products and services and artificial intelligence. Okay, they might have a point about the artificial intelligence, but if it's not well integrated, I don't see Zoom as a company that $1,500 by 2026. I don't think video call is that valuable, especially when there's so many other competitors like Google, Microsoft, and not to mention a lot of these companies are already integrated in the Microsoft ecosystem or in the Google ecosystem or in the Apple ecosystem. What if there's an Apple competitor to Zoom, which there is, it's called FaceTime, but it's not really for conference. It's mostly for family members and friends. So yeah, I don't really see Zoom being that valued. Don't get me wrong, there could be new competitors. But saying that, that doesn't mean that the company is cheap. It's 21 billion in market cap and valuation. So clearly people do value video chat. And I'm not opposing to that. I'm agreeing to that. But is it valued at $1,500 per share? I don't know. The AI solutions that they'd have to integrate would have to be extremely, useful and very difficult to replicate for other sites. They've got to have a moat. Do Zoom have a moat? For now, they have an edge in the market, but I don't see a lot of guarantees. But that's just me. But it's interesting. Will Nvidia be the next Zoom? Will the stock price go obsolete as the demands fall? Will the demands ever fall? The demands falling are inevitable, in my opinion. They're inevitable, in my opinion. Demands falling are inevitable. But by how much? It's hard to say. It all depends on how serious companies are taking AI. And they're taking it extremely serious. So if demands do fall, it's not going to fall anytime soon. Not by the looks of it. So that is it for today's video. Hope you enjoyed it. Subscribe and I'll see you in the next one. Peace.